let's talk about valuation class transfer. So I have this deal available. Before that, let's try to, take an example. I wanted to show you before valuation class transfer how we are, reversing a deal. Deal reversal we will see first. So this is my deal, 287. I have my cash flows. If you see my cash flows status, I will go here, choose layout, posting view. This is flag for posting. Let's go and post this quickly, 287. So we will post all the flows till here, execute this, post it. Okay. Remove the text run indicator to post. See, posting log. This has been posted. Now, if I see and refresh the status again, go back. Now the cash flows for this. Acha. Yeah. So if you see, this posting has been carried out for our initial posting. Now I want to reverse this deed. How will I reverse the cash flows? So whenever there is a process, so whenever you do payment, whenever you do posting, you have to reverse in the sequential order how you're doing it. So like I want to reverse this particular deal, it will throw me an warning that activity already has posted flows. So we need to make sure that we reverse the flows as well. So I will be redirected to this screen. I will give my reversal reason here and I will save this. 287 contract I'm taking. Now, if I want to reverse the flows, I will go to the transaction code TPM10. This transaction code is a very flexible transaction code which is used for multiple business scenarios. I will tell you all the business scenario for which we are using this transaction. First, let's see how we can reverse the flows. So I will choose which instrument. I will choose my company website here. Then I will choose what I have to do. I have to reverse. Then what is my reversal reason? I will choose my reversal reason here, like other reason maybe, and I will run it and execute it. So this is coming in. So if I execute, choose those to reverse and then execute, it is reversing this transaction. Now I will reverse this transaction by removing the test run. Executing this, what happened suddenly? Sorry. Now here I'm going to execute this and this flow has been reversed. Now if you see the reversal date of the flow is 11/24/2024. It is chosen on the basis of the date initially picked up of the deed. So this is the date when the reversal happened. Okay. Now this flow has been reversed. If you go and see here, if you go here and see, you will find that this cash flow will be reversed. If you go in the status to layout and if you go to posting view, you will see the flows has been adjusted and reversed. So it shows that activity does not allow posting at this point of time and all the flows are open to be posted again. And the activity status of this transaction is contract status. So this is how it is important to do any changes in the deal. What you have to do is you have to first reverse the deal, give the reversal reason, post, reverse those flows by going to TPM10 and then coming back here to make the changes. And then again, you can, do the whole process of settlement and posting. If you want to change anything, any structure changes or any sort of changes which you think has been done wrongly, you can do that. Now, the other place where we are using this transaction code TPM10, I'll give you 2-3 business scenarios. One of the business scenario is there are certain transactions, there are certain postings that have happened in some legacy system or some ECC system, and you don't want to post that transaction twice, but you just want to fix that transaction, or you can just show that posting appeared here. You don't want to pay that transaction. Assuming that it has already been there, you don't want to post a dual entry, but you just want to show it as posted here. Then you can use this transaction, this option. So here you will be able to actually see the transaction that has been posted in a legacy system and not again repost it or regenerate a journal entry. Rather, it will be shown as posted or fixed and no new document number will be created. This is one of the scenarios where we are using this transaction code. Any questions?
No, thank you. Yeah.
Okay. So this is how you do the reversal of a deal. Now let's open another deal, or we can take this deal only. Let me post. Now, what is a valuation class transfer? Valuation class transfer means that at a point of time, you have to change the valuation class like a short-term liability or a short-term debt to a long-term liability or a long-term debt, or vice versa, or anything else. That is called a valuation class transfer. Whenever we see, we do this configuration of valuation class transfer here. If you see here, we have already seen this configuration, define and assign valuation classes. So we have different sort of valuation classes under a general valuation class. This is a general valuation class like short-term investments. Under this, we will have multiple valuation classes which will be assigned to a particular valuation area. It is a fair value available for sale, different categories. Now, at a certain point of time, I want my instrument 26, which is a short-term debt, to be reallocated to another valuation class, which is a long-term debt or a liability for say. So what I am going to do, either you can do, I will show you the Fury app. This is the Fury app, execute valuation class transfer. For each almost all transactions, we have this available. Now, this is my transaction number. Currently, let's see what valuation class we are using for this. This is my transaction. There are certain things that we need to keep in mind that whenever we are doing this valuation class transfer, we need to make sure, like if date is the date of valuation class transfer, we cannot post the future flows. All the future flows should be reversed before you are posting. Anything before the date of the valuation class transfer can be posted, but nothing can be posted in future. Our current valuation class that we are using is basically, where is it? Here, 26. Okay, so our transaction is this. Product type is PLO. I will go down. My current valuation class I will choose as 26, which is my current valuation class. Now, here,
Oh,
now
sorry,
what is my
26. Sorry, 26 from where?
here? Can you see?
Okay.
Okay, this is my current valuation class. Now, what is my target valuation class? Let's take the target valuation class as maybe liabilities. Okay, I will take this and I can change the posting date, posting period, document date, whichever feels feasible, I can change that. Okay, and now I will execute this. Now I will execute this again. Now, what it says is okay, everything is fine. Let's go back, remove the test run, and we can execute this. From this particular date, your valuation class will be changed from 26 to new valuation class as 4. Now, let's go back. If you will see now, 4 entries are generated. You will be able to see all the back data from which to which date your transaction was a short-term liability. From which to which date your transaction has changed to long liability, normal liability. So here is the valuation tab. If you scroll towards your right, you will be able to see all the details like, here also filter criteria will also be available. I think for dates and everything, you can choose the layout and you can change the layout and see, date section is available here. So you can filter date. Here we have the, I don't know, there is no date. We can see it somewhere else maybe. So here you can see your valuation area being changed, your valuation class being changed. Now you can see the account assignment reference and everything details here. Position management procedure assigned to it. Let's go to status tab. Here you can go to system. You can see track the changes here. Here you can find whatever changes to this deal has happened. So try to buy on date. Yeah. This is the date when what is the value that has been changed. TM underscore 55 transaction flow. This is the details that is changed. And on 27, 2024, 1840, transaction condition has been changed. This is the table details, table key, all those things, who has changed it, who has given the short description, all those things will be available for you. We have reversed the deal and we have posted again. Whatever we are doing can be tracked from the changes section here available. Okay.
Yeah, okay, but what about the finance impact based on this transfer?
So what about
The finance impact, because now I have transferred this amount from the short
So
term regular.
from the reporting aspect, now this term loan will be long-term loan, will be considered as a long-term loan. So the position will not be shown in the reporting when you are trying to report a transaction with this particular valuation area. This amount will get from the date of the change. At the time of reporting, you will be clearly able to see that this transaction will not be considered under that valuation area when you run the TPM 12, TPM 13 reporting, which I'll show you at the end once we are done with all product reporting. When we see, you will not be able to see under this valuation area. So you don't have a impact in the system because you are just transferring it from one area to another. It will have a reporting impact because currently your short-term liability has been converted to your long-term liability, or maybe your short-term debt has been converted to your long-term debt, or long-term debt has been converted to your short-term debt. So now what has happened is the actual, decision making of the cash flow availability and everything, whatever this deal is triggering to the cash flow analyzer, it will not report it under the short term positioning if you convert it to the long term. If you convert long term to short term, then it will be showing in the short term positioning. So there is major reporting that you will be able to see is you will be any which ways you have all valuation areas. You can clearly segregate the data that this is my short term debt, this is my long term debt. Till date, you had 5 lakhs of long term debt. But as soon as you change the valuation area from date onwards, you have that debt as a short term debt. So that's the major impact.
So Khalil, let me give me the real example, okay? The real example when we take a loan, مثلا, for example, for 5 years, okay? Take one borrowing deal for 5 years, but the finance team, he wanted to report about each year about the short term. Yeah, it should be take some amount from this deal as a short term for each year, and the other amount will be reported as a long term. How can
Then
we do
you
it?
can do partial valuation class transfer. In that case, you can do partial valuation class transfer. Wait.
Like, when we do the partial transfer, this it will also will be posts this amount for the short-term GL.
Then the GL accounting, you can change the update type configuration accordingly. So as per your valuation areas, whatever update types you have maintained, it will post to that respective update type. Got my point? For valuation area, you have a GL, which is a short-term valuation. For short-term valuation area, you have a GL X. And for
Okay.
long-term, you have Y. Whatever amount you have, transferred to
Yes.
short-term to long-term, it will be posted to that GL. And then remaining amount will be posted to your XGL. Got my point?
Yeah, I got my point, but your point it's clear for me. But I'm talking about the system now is booked the total amount on the long term. Yes, when we post the deal as the first point.
Okay.
Second
So
point, once.
1 second. 6 lakh is your total amount
Yes,
posting.
yes.
Okay. Now, what you want to do with this?
I want every year to distribute 1 million, for example, this for 6 years, okay? For the first year, I will be transfer 1 million from this amount as a short term. And based on that, I need also to book the amount on the GL as a short term. Now the
Okay.
total amount has been booked on the long term deal as a 6 million. But now I need to transfer from the 6 million 1 million to reduce the long term
It will
investment.
automatically do with this particular transaction. So currently what has happened is it doesn't matter whatever you have considered in the beginning. That is why there is a specific date when your valuation class transfer is happening. So for that 1 year, your 6 lakh or your 6 million was short or long term position. Okay. This
Okay.
year it is a long term position. Okay. Now every year, like on 1st of Jan 2025, you posted this much to short term. Now, what will happen is your long term position will be only for 5 lakhs for this particular year because you have transferred this segment to your short term valuation area. But still, it doesn't matter because 6 lakh you have already. So, if you have 6 lakh already posted to a particular valuation area for date, it doesn't post any journal entry for future date because you have only posted it for date. Now, that's what I mentioned. Valuation class transfer is important to be done before you actually post for future. If I have a posting made for future, like I'm doing this date, I'm doing my valuation class transfer, but I have a cash flow posted for even 2nd Jan 2025. You need to reverse the cash flows. You will not be able to post the valuation class transfer if this cash flow is posted.
Yes, this is clear for me. But I'm talking now, I have posted 6 million on the long-term position. System will be adjust how the system will be adjusted the 1 million once we transfer this 1 million from the long term to short term, and also
But
how the system will
no. Currently, you have posted 6 million transaction. You have not posted any journal entry for it. Currently, you have not posted a journal entry for it. You will post a 6 million journal entry only for date, which is 1st Jan 2024. On this date, you have posted 6 million as your borrowing, correct?
Yes, you are correct. Yes.
Now, what happens is, till this date, it was a long-term borrowing for you. Till this date, it is a long-term borrowing for you, correct?
Yes.
Hey, you know, ZaranTech now offers SAP corporate training. That's right. Train your workforce in SAP with our comprehensive program. We offer customized courses, certified trainers, and hands-on labs for both individuals and businesses. Our standout features? Bespoke training, fully configured servers for practice, in-house materials, and a dedicated LMS. Plus, get session recordings and 24/7 support. From functional to technical modules, we have got it all. Choose ZaranTech for SAP training and watch your team excel. Learn, upskill, succeed with ZaranTech.
Now, what happens is, as soon as you do the valuation class transfer, for the current year, when you're going to do the posting for TBV1, it will post a reversal for this 1 lakh and it will post the journal entry to that GL, which is your short-term GL, short-term valuation, whatever update type is assigned to your short-term. So this 5 lakh will be posted to this GL, and remaining 1 lakh will be posted and transferred to this GL, the new valuation area GL. That's how the system will function. So that is why whenever you transfer the valuation area, whenever when you were asking me this scenario of valuation area configuration, if you see here, as soon as you transfer your valuation areas from one to another, the update type transfer also happens at the same time. So whenever we see here in this configuration, if I go general settings, accounting, link to the accounting components, here if I go find account determination, now if you see, I have taken this and I go here. Here, the reason we maintain a valuation area here, so I have maintained a valuation area X, a valuation area Y. As soon as your valuation area changes, your 1 lakh posting will be transferred from this GL to this GL.
Okay. But again, no relation between the valuation area, because the same, it will be assigned for the same valuation area.
No,
Yes.
it will be same class. Correct. Same class is assigned. But based on the account assignment reference, system knows which GL to allocate. Based on your account assignment references, system knows which GL to pick when valuation area is X and which GL to pick when valuation area is Y. Am I getting your question right?
Yeah, because as per my understanding, the valuation area, it will be the same for both. But the general valuation area, it will be different. Yes, I am agree with you about this point. But how the system will be linked, because both is assigned for the same. Both valuation area is assigned for the same valuation class. For example, if we go return back for the previous point for the configuration, you will find the same valuation class assigned for both. And not this one from the configuration, from the valuation when we define the valuation class. Yes, here. For example, the same valuation area, let's say we are using the valuation area US, for example. The same valuation class, if we talk about the 4, is assigned for the same valuation area, and the same 26 is assigned for the same.
Got your point. Now see here in the deal, as soon as you change your valuation area it is updating the valuation class also here, correct?
Yes.
You can see from the deal, any which ways, when it is posting to this valuation area, it is using valuation class 4.
Yes.
Now, what you can do is when you are creating your account assignment reference automatic generation here, if I go back, you see here, define automatic account assignment generation. What you can do is in the determination, in the criteria, you can mention the valuation class as a criteria. We have defined it here. You can maintain a class as a criteria. Now, when a valuation class is for this company code is X, then it should pick this account assignment reference. When a valuation class for this particular company code is Y, it should pick this account assignment reference. Here also you can differentiate the GL.
Okay. Yeah, this is clear for me. Yes, but I'm talking about the previous data. Now, when we transfer, the system will be create again one posting as a new borrowing on the short-term liabilities or what?
Sorry, can you come again?
Now, as you agree, okay, I have hit the deal with 6,000, okay? This as a long term. And the system already posts this amount to consider the deal already is done. But based on the internal reason from the finance need to classify some amount from the total long term as a short term. Yes? Based on that, sorry, I already post 6,000 on the long term liabilities. But now I wanted to classify this year. Okay, I got your point. Now we have a different class, and based on the classes, we can create the derivation rule to bring the different GL. Okay, but when the posting will be done, yani now already I post 6,000 on a long term liabilities. If I make again one posting on the short term liabilities by 1 million, which means I will be increase my liabilities. Okay, total liabilities it will be increases. You got my point?
I got your point. Okay.
In this case, now I need to in this situation, let me say, it could be have a different update type to create the transfer amount from the long-term liabilities to short-term liabilities.
Yes, I think we have already discussed this point. I think you might forgot that point. You saw, I told you there is an update type for transfer we created. Let me show you that. I showed you that. I will show that to you again. Give me a moment. We have gone to this configuration multiple times. Yeah, can you see? Here I go, I have specifically assigned the update type for valuation class transfer here. Against this valuation class transfer, if I go in the accounting, let me go to the accounting. I go here. We have already preset the current portion transfer liability. This is the posting specification. Now we will go to the posting specification. This will automatically be posted based on our configuration. Now, here if we see the posting specification, that posting will happen. This is the posting that will happen, which is assigned to this update type, which is a reset current portion transfer liability, which is resetting our current portion liability. And then it is posting to your new whatever GL already made.
Can you show me the posting now?
Okay, I go in the accounting period valuation. Yeah. You see here, valuation class transfer. We have defined multiple update types and usages for valuation class transfer. You can define as many as update type. One is, clearing liability, etc., etc. Now the main update types which you use to assign update type for valuation class transfer. We first use here. This is the update type for valuation class transfer, which is this VP_001, which is being used for resetting the current position. Okay. And then clear units under slash nominal, like that means whatever units we want to reset from the current position, it is going to post to that. And then is post units in the new valuation class. So this is that posting. Now, if you check these two postings in the configuration of update types, which is in the account assignment, you can see the journal entry is determined in such a manner that it is transferring the value by debiting the GL which is extra debited or extra credited, or crediting the GL which is extra debited. So that is how this transfer is happening. The reset is happening for the main position. We have already defined the update type for the valuation class transfer, and based on that, the system is performing and creating those journal entries. I go here, 001. If you read the text, it is reset current position. One second. It is not defined here. So what happens is whenever we define the update type, we assign the posting specs for reset to this particular VT underscore 001 update type, which is this one. I go here. This update type will have the posting specification assigned as the reversal of this amount. And then this posting specification will have a posting to the GL of the new valuation class of this particular amount, and rest this amount will be posted to your old valuation class. Make sense?
Yes, يبقى احنا عندنا كده two posting will be done. One to reset
Yes.
the
One is
amount.
to reset. Here is the clearing the units from the original posting. Second is posting the units to the new posting. These two update types are assigned here based on this configuration. System will determine which is the reset posting, which is the new posting. And in these, you can assign your GL, whichever GL is to be assigned. Okay.
Okay, but this it will be generic for all kind of the transaction. This update type it will be using for all
It will be done for everything. So similarly, you have multiple types of transfers, not just valuation class. You have this account assignment transfer also. For everything in SAP, system has created the update types. SAP has provided you with the different types of update types. So here in the account assignments also, you can choose your product type, transaction type. You can choose your main flows which you want to transfer, and then you can choose the accrued flows here, and then you can choose the price, and then you can choose this is the position outflow, this is the position inflow, and based on this, there will be an internal transfer to these particular update types, and then you can determine your. So like that, there are multiple business scenarios for which you can use a transfer mystery in SAP. The only trick is that we have to make this configuration of the transfer to make the system understand which is a reset and which is an actual posting. Rest everything will be controlled by the journal entries or posting specifications.
Yeah, I know.
Whatever you assign.
Yes. But I'm talking. I'm talking about this now. Now, if we have a different deals, okay, the different deals is assigned for different types, okay. Different types is assigned for different GLs. Now, when we reset the deal, it's supposed to reset by one GL account. To be defined.
No, you can define as many as GL to this update type. We have done this configuration, right? We can define it here based on your account assignment references, or based on your currency, or based on your valuation area differences. You can assign as many as GLs you want to this particular update type in the account determination. All these three criteria are available for you. You have to find out and figure out that what you want to use as your suitable criteria for changing the GL.
Okay. طب خلينا let's try to post كده this deal after the transfer to understand the entity.
Okay.
Yeah, now I know about the configuration. Okay.
I don't know. This configuration is not made in the system, Mr. Eagle. So you see now update types were not created with the posting specs and everything. So maybe I think you need to let's see what happens in the system.
Yeah.
So this is administration.
Now the transfer should be settled, or what is the next activity?
It's already settled, not an issue. We can directly post. If you want to reverse any flows, future flows, then you have to reverse the cash flow how I told, and then again you have to do that activity. Okay. This is posted. I have to change the date. What is the date for this flow? I will take this date. Now system has posted the interest positions, and there is all this limit. Now we have to configure that transfer posting and everything. But currently the valuation class is 25 that it is posting to, and valuation area is US0. If we see here, position indicator, if you see this valuation area is basically your liabilities. This is the valuation class, liabilities. And here your valuation class is 25. This only we have changed, but the settings for this has not been updated. The transfer valuation class transfer settings of the two update types. If you try to update the posting and assign to the respective update types, then it might show the effect here in the transfer. Let's see if you can try and build the scenario, try to configure the scenario. If in end we have time, we will try to get the scenario and do this, so that you have better understanding when we have time left, because this is a business scenario basically. So if you can build this and have time, you can test it and try it, configure that with the update types, configure the posting specifications, create the GL assignment and all that you can do, and then you can see how it works.
Okay.
Okay. There'll not be an issue because all the configuration in SAP Treasury is standard. I can guide you everywhere. You can just assign the transfer postings, create that update type. Update type is already created. Just assign a posting spec to that update type and then try to post that. If you face issues, we can discuss, once we are able to complete our course, we can issue. See, I am okay to, discuss your business scenario, but the only thing is we are short on time. So business scenarios, take a lot of time. We can see if we have handful of time, we can give an hour or so to, different business complex business scenarios. Okay.
Yeah, but this is not complex. This is the basic scenario.
Yeah, but this is a business scenario, right? So I understand a business scenario, there can be multiple business scenarios, Mr. Adel. But the thing is that requires a background configuration for different business scenarios to act differently. That is why, in standard, if we show one thing, that is why we have 50 hours in hand.
Yes, but this is a basic business scenario to cover the whole business process, as you know.
Sorry, can you come again?
I'm talking this is the one of the main business scenario should be covered, because this is the regular activity should be doing to transfer some activity from the long term to short term. Accrual already covered. Yes, this is correct. Money market, we taking the fixed term deposit and loans. Also, I think about some product can be discussed like the commercial paper if we need.
That I will discuss. 100%. I will keep. I will show you every product type which you tell me to. That is standard. If you tell me the commercial paper, bank guarantee, I will show you whatever you want. What standard you want?
Try to complete
please try.
Scenario, but if
these are certain things. Yeah. You can also take reference from, SAP help also. They have a lot of documentation available wherever you're stuck. In SAP, if I tell you one standard process of creating one update type, assigning a posting spec, you will be easily able to do it. So that is the reason I am telling you. I will show you commercial paper. Don't worry. Okay?
Yeah.
Don't be worried about, I will not tell you. If you tell me this product type I want to see, I will show you. Okay?
Yeah, sure.
Okay, let's start with securities. I will take session till 8 as I will have to leave for some work. So let's continue till 8. Okay. Now, what is securities? Firstly, as per your understanding, what do you understand by security in general term?
Security is new for me. So security, like the business process, I know sometimes.
What do you think? Why we would need a security instrument, and why cannot we? It is a sort of borrowing only, right? It is a sort of a borrowing. So why do you think we would need securities and we cannot do it with money market?
Yeah, let me explain what I know about this part.
Okay.
The security part, we have what is I am touching with the business side. Okay. Our business, he deal with the bank to get some certificate or some bonds. Okay. This bonds is taken from the bank, and based on the bonds, I think we have dividends will be distributed over the particular times. Okay.
But that is your general understanding. I understand that you understand. But now tell me, we can do this activity with money market also, right? As terms of interest received or interest paid. We can do this activity. We can create multiple flows and other things. But why are we creating a separate security module for this? A separate security instrument for this? Why cannot we use, other money market module for this?
Because I think the security, some part should be calculate the risk analysis. Yes.
I'll tell you. No. Yeah. The main reason why we are, doing the security module and not the money market module covering, and that is also, sometimes a business will come up that they have some senior notes or bonds, which, have posting like 5 lakh of senior notes and etc. Then it is you who has to decide that can you treat these senior notes under money market or not. And how you will decide that? You will decide that are they dealing in units or are they dealing in nominal amount? Okay.
Yes.
If they are dealing in units, like 500 into 100, if they are dealing in units, then you have to go with security module. If they are not dealing in units and they are dealing in nominal amount, you can go with money market module. This is the difference. And based on your scenario, your business scenario, you have to take a decision on that. Okay.
Yeah. Yes. You're correct. Yes.
Okay. Now, there are two master datas that we need to create for our security module. One is a security ID and one is a security class. Now, these security ID and security class, they are one of the master data that we create for security specifically. Now, what are we creating in the security ID or security class? Basically, a security ID or a security class is nothing but controlling how or what type of securities are there, from where you are taking the securities, what is your nominal amount, start date, what kind of conditions will be applicable, what type of bank is acting as your depository, what type of bank is acting as your issuer. These kind of information will be controlled from here. Okay. Now you will create a security account. Assume you create HDFC as a security account.
Which one it should be? This is the first class or the account?
Currently, we are creating security class.
Yeah. Okay.
Okay. Now let's take this. Let's copy that. Okay. Now, so we have created a particular security account as HDFC, or maybe we can take other bank as JPM or something, etc., etc. Whatever bank information is given here, USD, okay, anything. Now you have to give an ID, a unique ID that you will be using to represent your security account. So this is the ID that you have to provide for your security account. What is the type of your security? Is it asset based or is it a liability based? Is it a issuance? Is it a asset security account? It is a issuance security account. There are different types of security accounts available based on what type of securities you are going to raise or lend or borrow or whatever. It depends on that. And based on this setting, you will create a account category. Is it an asset or is it a liability of securities? Then you remember,
which means I will issue this one. Yes, I will.
Yes, you will raise fund with this.
Yeah.
Okay. Now, this is your depository bank. Depository role I have already explained you. We have created and extended a business partner in the depository role earlier. This is the depository bank where you will be depositing your securities and the issuance bank will be issuing your securities. These are the payment details which will be automatically fetched while creating the security deal. Now, I will say,
Ms. Akanta, sorry for interrupting you. What is the difference between the depository bank and the issuer bank?
So, depository bank is something. One second, huh? Yeah, just a second, Mr. Hitu.
Yeah, yes.
Okay. Yeah. So, what was your question? Yeah. So, basically, depository bank and issuance bank, I told you that the depository bank is that bank which will hold your security, where you will deposit your securities. It manage your securities and it will, take care of dividends and interest payments, etc., etc. So, it is a sort of a custodian bank for your company, for your trading your securities. Whereas issuer bank is nothing but it is a, issuer of the bonds, shares, letter of credits, etc., etc., in the market, and it will issue your respective securities it will act as an investor sort of a person or a counterparty. It will, basically responsible for managing the issue of these instruments. How you are issuing it in the market.
Who is issues the bonds for the securities will be considered as issuer, yes?
Yes.
And who will deal to finalize this deal?
Who will hold the value will be a depository.
Okay. Yani, for example, I go for bank HSBC. I ask him, please, I need to invest for the other depository, مثلا, okay? For other issuers, sorry, okay? Yani, I will be considered the HSBC as a depository bank. If I am dealing direct with the HSBC to finalize the deal with the issuer, yes?
Correct. Okay. So this is how you create your security class. Now the transaction code to create your security ID is FW. This is the main transaction which will hold all the details of your deal. So in the deal, the two things that you give while creating a contract is a security account and security ID. So that will fetch all the data. So now we are going to create the deal. Oh, sorry, create the security ID.
What is the difference between this ID and the previous ID?
That's no difference. The data that you are seeing here, that is the main difference. The information that it is holding is the main difference. There are two
Yani
master data created
same
to
ID
pick
with
and
more
bring
data.
the data. No, we are creating a different unique number. So these class and ID will hold different sets of data. That is holding your data for depository. This is holding your data for issuer. And the respective data, how it will be repaid, what will be the interest, what is the nominal amount, what is the term end, term beginning, all those details, what type of bond it is, all those details will be fetched from here.
Yeah.
There also here you will see many scenarios you can take with reference, and we can see you can take a reference of 04, right? No data available. Okay. Here. If you see short term, long term, I have a category which I have chosen as bond. This is a sort of a bond. This is a fixed interest bond. So you will be, paying a sort of a fixed interest on this. You can choose the bond. Bond classification can be a corporate bond, bank bonds, anything like that, which is your client scenario. Okay. These are the important fields that you have to input in this particular ID. Basic data. Okay, we are doing this, but before that, I completely forgot. I have to show you the configuration of product type and everything of securities also. Completely forgot that. Okay. Any which ways, I'll show you after this. Oh God, again, I'm facing this issue. It is not allowing me to search for business partners only.
Can you start? You will be bring the whole business model.
1753, I will extend this to take years. Nominal value you can set here if you want to. Issue start date, we can take it as end of term, we can take any date as per your business scenario.
What sets ZaranTech apart in SAP corporate training? It's our unique blend of expertise and innovation. We offer customized courses tailored to each client's needs, ensuring relevant, targeted learning. Our vast trainer database brings you wisdom from the best in the field. Need resources? Access our extensive training material repository anytime. We are all about measurable results, providing detailed student metrics to track progress. And we don't just teach, we build community. Join our thriving social media network, connecting learners beyond boundaries. With ZaranTech, you are not just training, you are transforming your SAP expertise.
You can give a nominal value if you want, or we can give it the level of a deal. Under one security ID and security class, we can create multiple transactions or multiple contracts under one security ID and security class. Here you will have conditions as to how you're going to pay your interest. And now, what all things you're going to pay or do with the cash flows will be determined from this screen. If this screen does not have any condition type here, you will not have anything available in your deal. Okay, so from here, your condition types will be determined. Before that, let's go to SPRO to understand how these condition types are coming in here. Here, you define the number ranges for your security classes. How your security class number is determined. So you have taken a number range from this to this. It is an external number range. That is why in the screen of security class, we were able to give a manual number range here. In this transaction, we were able to give a manual number range. Okay, see.
Yes. Yes. Okay.
You can give it a manual number. I go back, then define condition types. What are the condition types? These are the condition types which we are going to define now. Here I have defined multiple condition types, dividend, etc., repayment, cash dividend, whatsoever conditions, some standard conditions are available. Final repayment, issue, all those things, conditions are available to us. Here we are going to assign our condition types for, create a condition group. This is a condition group which will be assigned and fetching our condition type. So this is a particular stock. This is for bond. Like this group is for bond. So for bond product type, whatever, this is the group created, and for this group, whatever condition types we are going to assign to this group will be seen in this screen here. Now you will see how. Now, if I assign condition types to condition groups. So if you see for 40, if I go here under this, if you see for bonds, you have all these condition types available. So you can create only these condition types or add only these condition types here. So if you see 100, 101, 118, 209, 262, 263. So here you can say all this 101, 104, 209, 262, 263, 311. That's how you can assign this configuration. Okay, now we have to define the product type. Similar way, we will define the product types. You can define the product type. I will take fixed interest bonds here. The product type will be defined in the same way how we are defining for other this thing. Condition group is important. This is your condition group which you are using for the assignment of your condition types. If you see assign condition types to condition group under this, that's how they are linked. For 40, if you create something under 40 group, you have to create the product type under 40 group when you're creating the product type. Got my point? This is the group.
Right.
That's
Yes.
how linked. Okay. Now, if we go back, assign repayment types to product type, how you want to repay your bonds. So for fixed interest bonds, I want to repay with a repayment type 1. If I want to repay as many repayment types you have, you can assign it to your more than one repayment type can be assigned to your product type. Okay, you can assign it here. How you want to repay your bond. Now, here, you will define general valuation classes like it is a money market or it is a bond, it is a stock, it is a subscription, it is any other bond. So these are the general valuation classes available for us. Here, this is done. This is the major stuff of product type. Now coming to specific class data, the class that we are creating. So here, basically, the class data comes second. Okay. So basically, these security indices are created for the purpose of your security class. If you see, you will see this field security indices in your security class also. If I see here, you will have a security index available.
There's a security account.
Sorry, yeah, security class. We have condition thing.
First one. The first screen. Yes, down, down. This
Yeah,
is
here. So here you have the security indices and you can assign the index value against those security indices available. So here you can choose to, see which is available for you and which you are using for your particular type of bonds or particular type of securities. Then we have custody types. These configurations are provided to us standard. And if you want to create anything additional, which is, specific to your particular this thing scenarios, you can use that. This is for your product category 1, 2, and 3 that we are not creating as of now. We are using 04I, which is your product category. Then we have security types. What types of securities are available? We have bearer, we have register security, we have non-register security. These are the types of securities, which is also available in the same screen. Now, coming to security account management. Here you can see additional tab pages in class data. You can explore these areas also. This is your different fields in your securities which are available. This is the main configuration. Define security account. Under define security account management, you will find the security account types. So we have already discussed there are different types of security account which you saw here in the screen. These are your security account types. Is it a asset security, issuance security, lending, whatsoever security is there, you can choose and create. If your client has a separate requirement, you can create that one. Maintain field selection for security account master data. Here you can control which fields will be, available and display and mandatory. All that data can be controlled from this configuration available here. You can control your settings here for the field status group. Define blocking flags. Here you can, define if you want to block any security. These are the block reasons. So we have this left where how to define blocking flags. Define generation of security account position indicator. Here we basically define transaction management and we choose, our business transaction for which particular company code we want to generate which type of position indicator. So do you want to generate the position indicator automatically? Do you want to generate the position indicator manually? You always have an option while we are creating a contract and we are saving the deal. That time we have an option to generate this automatically or manually. So that time you will get a pop-up, then you will understand what is the relevance of this. This you can specify for company code wise if you want to change any settings, but this is applicable to all the company codes. That how you're going to define your security account position indicators. Define generation of subledger postings. Here also we have multiple options as per your product groups. If you have security, listed security, derivative, OTC, etc., etc., you have the origin BT, your business transaction. Here you can choose how you're going to derive the subledgers. So here, if you see all the interest and everything, they are generated for automatical posting. So here it will be generated automatically for your company codes, respective company codes. If you want to change any settings, you can go and change here. While creating the contract, you will be understanding the same. Here we have certain bodies available for securities for subledger posting indicators related to account assignment reference. You can determine or define a body and you can implement that body. So these bodies are for different purposes. One is for position indicator, the other is for security account position indicator. You can explore more about these bodies. When you are going for an additional settings which are not offered by your standard configuration for related to position indicators, or you want to determine anything extra, any special field or any sort of a posting that cannot be automatically determined. There you can use these body options. Coming to
Sorry, Mr.
transaction,
Khalid,
yeah.
what is the purpose of the position indicator? For which?
So we have seen the position indicator in this thing also, what you're saying, money market. Okay. Basically, in securities, what the position indicator does is it is used to define and track financial positions such as security, foreign exchange, and other money market instruments. We can manage all the financial positions and different across all valuation area, portfolio, etc., with this position indicator. It also, it is a very unique field that, a specific financial position or supposition within a treasury transaction it is essential for accurate valuation and reporting purpose also. Based on this, you can see your reporting and you can group all the same type of transaction and track same type of transaction under one financial instrument type. Like securities can have multiple transaction under one security class. This position indicator will be helping you to track all these positions based on each financial instrument type. Also, you can use the position management procedure to define how positions are created, how they are tracked, how you're going to close it across the life cycle phase of the position of the securities. These are different bodies. I think once you get something, complex scenarios in future, you'll be able to understand more and implement these as per your requirements. Your technical team will be able to help you understand more about these bodies in terms of your business requirements. Now, here, the next part we are going to do is similar to what we have done for other product types. We are going to define the transaction number ranges. Here, you can define the number ranges for your contracts, for your securities. We have already defined the number ranges. We can use any of the two. Here, you have seen underlying transaction. Now, there are two number ranges. One is for the underlying transaction. So, any future options that you're going to trade as an underlying transaction for the security, the number ranges are assigned for that purpose. Date rules. These are the date rules that you can create here. The date rules are used for purpose declaring any holidays, any specific calendar, specific dates where you do not want to trade your securities or you want to mark it as per your holiday calendar, etc., etc. You can define those date rules. Rounding off rules is how much decimal points you want to round off to. You can define it here and you can create the currencies you want to round off. Here is the rule. This is the round up to this decimal point. These are the basic settings available. And then we define the transaction types. In securities, what are the transaction types we use? Either a purchase of security or a sale of security. So, we create a money market fund also under securities module because a money market fund borrowing can be traded in units. That's why we have a security transaction for money market funds also. So here you have the price, purchase and sale transaction type, which we are using for security. Flow types that we are going to use for securities are nothing but discounts, principal increase, placement, redemption, and then purchase, sale. These are interchangeable terms you can use, purchase, sale, or you can take principal increase, principal decrease, or you can take issue, redemption. Any types of flow types you can use as per your convenience. These are interchangeable terms. Then we have dividend, brokerage, interest, premium, discount. These kind of flow types also we will be using in security module. Here we assign the flow types to our transaction type, similar to what we have done earlier. Derived flow types, we have also talked about this flow types. What are derived flow types? They are the derived which are derived based on a particular procedure. They haven't defined any flow types, but these are some taxes that we are paying, VAT related, or any types of flow that should be derived from your principal flows that can be considered as a derived transaction here. They haven't created any, or they have created interest income tax. Here you can see the derivation rule is given. When it is given, you can give the derivation rule. It is based on this contract type, it is derived with what is the validity, how you're going to calculate it. All these rounding up rules, all these scenarios can be considered while reading for your security. Now, update types. After coming to update types, whatever flow types we have generated, we have to create and define the update types for the same. Like we have principal increase, principal decrease. And then when you assign it here, you have to choose transaction management similar, and you have to give your update types and assign it here. Similar to what we have done in money market and facilities. Then we have to assign our flow types to our update types under security condition type. There is one change that we have to use the security condition type to assign those update types. Further, you have to assign the general valuation class to your security transaction. Here you define and assign the valuation class to your product types. This is a product type which is using the general valuation class. This under this general valuation class, whatever will be the valuation category, valuation area will be assigned. So these are the settings per company code. For this, if you want to define any setting specific to a company code, you can change it here. Like if I want for a product type 01A, this is the standard general valuation class. But I want for my company code, there should be something different and additional also. I can change it and make it here, then this setting will be taking precedence over the general setting. These are all standard. We have already talked about all these things. That's why I'm not going too much into details. Security account management. Here you define the update types and for security account management, what types of update types you use. So like position management procedure, we have multiple types of security account management position management procedure created here. This is the same screen, sort of a same screen which we are using. Here we will be creating a particular position management procedure for securities, and here we will be defining that what will be the interest calculation, what direction of payment would be there, how the flows will be classified, how we are going to position debit or credit our position, can we automatically do it or generate a debit position flow or not. So these indicators are available to control basically your the transaction or the security account that you are creating. It will control the settings of your security account management. Now you will, this is important, assign update types to condition types. Here you will assign your update types to your respective condition type. Now what are our condition types? Our condition types are interest, dividend, repayment, etc., etc. Here you have to assign the incoming side and outgoing side of the update type. This is a different configuration from what you have seen as account determination. In the account determination aspect, we assign the update type there in the posting specification itself while doing that configuration. But here in securities, you assign the update type to your condition type. If you do not assign your update type to your condition type, your flows will not be populated automatically or your postings will not be done properly. So you have to make sure that you don't get this error. You have all the condition types in place and properly maintained in here. Going back, so for security account management, there are update types assigned here also, like for nominal interest. If you want to do a manual posting, there is a update type that can be assigned to manual posting of your debit positions like cash dividend received, etc., etc. So everything just comes to one place, that you can have all types of scenarios, endless scenarios. Like you can have multiple scenarios like accruals, valuations, transfers, dividend, interest, premium, discount. But everything can be posted if you have a respective update type created for it and respective update type assigned at the proper place in this setting. If you do not assign your update type here, every configuration will fail. If you have to post anything, it is important you create a condition type here. You assign that incoming and outgoing update type, and you have a journal entry or posting spec assigned to this particular update. Coming down to update types and usages, we have already done. Here we have to, if you want to transfer, similar to valuation area, if you want to transfer your securities from one, this thing update type to another update type, maybe you want to do it for, you know, this is a asset security account. If you want to use, what is this, SAT 1020, let's see. This is security account transfer inflow. This is a posting for inflow. If you're transferring an inward transaction for security account transfer, if you're doing an outward transaction, this is the outgoing journal entry. So everything that I said earlier, if you want to transfer also, that transfer is also possible, but it is only going to work properly if you have the standard configuration, standard update types marked properly, and the posting specifications allocated to be updated. So this is our standard configuration for security. Nothing is different from market except the layout of how we are doing the assignment of things. So at certain places, you are assigning your condition type to flow type in money market. Here you are assigning your condition type to update type in securities. Does that make sense?
Yeah, that makes sense. Yes.
Perfect. So I think we will do the deal creation and other aspect of securities when we resume back on Monday. Till that time, you can have a good time and practice all these things, and maybe we can, you can keep a note of your doubts. We can see once we end our sessions if we can sort it out in a quick time. We can do it. If there is a specific business scenario, we can keep it on hold and we can do it once we finish the settings, and that time it is not clear and covered. We can do that. After securities, we are going to look at your request. I will take forward first, which is commercial papers and bank guarantees, how we deal trade finance instruments that we are going to see. Okay?
Yeah. Okay.
Okay. Thank you so much.
Thank you.